And welcome back. So before we get into the more specific concepts of technical analysis and also price action analysis, I want to spend a few minutes to introduce some of the most important and most common terms in technical analysis. And I want to show you what technical analysis is all about, so that during the next videos we are on the same page and you'll not get lost as easily. So technical analysis is what we use to make sense of our charts. Here in the middle we do have a price action chart, and at first glance it does look very messy, very hard to understand, but in trading we have to make sure that we can understand such a market so that we can then potentially make a profit from it. So technical analysis use different tools and concepts to make sense of such a chart. Here one more time, price action and technical analysis are a way of analyzing and decrypting price behavior and Forex charts. So with price action trading and technical analysis, we try to understand what the traders and the investors are doing, because you have to keep in mind the price action and the candlesticks, the line graph on your charts, they are just a representation of how investors, traders, speculators, and the other Forex participants are moving the markets. So we have to understand who drives the market, who is in control, who is stronger, bulls or bears, and with technical analysis and price action analysis we can achieve that. So first of all, this is probably the graph that you all know. We see that in financial media, in the newspaper, and also in TV, and this is what we call a line graph. And the line graph is just a representation of the different prices of a stock or an index, a Forex pair or whatever, and you can follow the line graph and the development of price very nicely and easily with the line graph. But what we are going to use is the so-called candlestick graph, and in the next slide we will get into candlesticks. And candlesticks are a more advanced and more detailed way of looking at price action. It does show essentially the same like line graphs, but with more details, and we will get into that later. So here is a candlestick or candlesticks. You can see when you look at a price chart, you usually have black and white bars, and each bar is what we call a candlestick. And a candlestick consists of two parts. First is the body, which is the solid area, either white or black, and then the second part is the wick. Those are the lines here that stick out to either the up or the downside, or sometimes to both sides. So you can see we have a solid area, the body, the line are called wicks, or also sometimes called shadows. Then the black bars are bars where price is going down, the white bars are candlesticks where price is going up. And a candlestick provides us a lot of information. So the first part of the candlestick, where it starts, is the open price. So you can see here one price opened here on the open of this body, and then price moved low all the way to here, and it closed right at the other end of the candlestick. When we look at the white bar, as I said, it is a bar or a candlestick where price moved to the upside. So price opened here at the low, and then during the duration of the candlestick price moves up, and then we close here. And you can see the lines here, they show the absolute high and the absolute low. So in this case price moved up a little bit here beyond the body, but then we fall back and price closed here. Here's a better example of a candlestick with a wick. So you can see is a white bar, so we opened at the low, we closed at the high, but during the duration of the candle price moved all the way here to the bottom where we have the low of the wick, but then price moved here back up to close at the very high. So don't worry if this is a little bit confusing. In the next videos we will get into that step by step and very specifically. This is just a quick introduction to familiarize yourself with the terms and to get an understanding of a few very basic principles. Then in technical analysis we also look a lot of trends, and whenever you look at a price chart you can see that price either goes up, it can go down, or it can go sideways. So if price goes up or if it goes down, then traders talk about trends. So you can see here we have an uptrend here where price goes from the bottom left to the top right. This is what we call an uptrend, a bull market, or a rally. On the other hand, if price goes down, you can see we move from the top left to the bottom right. Price falls in this period. This is what we call a bear market or a sell-off. On the other hand, if price just goes sideways here, not a lot of happening, you can see some up and downs, up and downs, up and downs, then this is what we call a sideways market or also a range market. And within a trend, you can see that price does not just go up in one straight single line, but you always have those up and downs, up and downs, up and downs, and those up and downs, they form higher highs and higher lows. They drive price up in this example here because we are in an uptrend, and those individual little moves during those trending periods is what we call waves, and they call trend waves. And the waves that go into the direction of the trend here, in this case an uptrend, this is what we call a trend wave, and the movements opposite to the uptrend here, they are called corrective waves. So waves are a very important thing in technical analysis, and I dedicated one whole video just to understanding waves, because once we understand waves, we can have a much better understanding of who is in control of the markets, who is stronger, buyers and sellers, and what is actually going on. Then at the end of our trend waves or corrective waves, we have so-called swing points. So you can see here at the end of each trend wave, we have a swing high, and at the low we have a swing low. So you can see how swing lows and swing highs together with the waves, they make up our trends and the trend waves. And here another very important concept of technical analysis is what we call support and resistance. And support and resistance are those horizontal lines you can see on the charts that I drew here, and later we will spend a lot of time analyzing support and resistance, but for now it is only important that you understand that price always gravitates towards some very important price areas. So here is a recent chart example, and you can see here where I drew the support and resistance levels, price always has struggled. So here you can see that here as well. Then price broke this support line, we came back into this here, and then here price found support again, here as well. And you can see that once we draw those support and resistance lines, we can very nicely describe price, and you can always find those areas of confluence, which just means that with one support and resistance areas, we can already find common areas that are very important for us on our charts. So in the next videos, we will get into the specifics of technical analysis, and then we will explore each concept in more in depth and longer. And for now, it is just important that you familiarize yourself with the different terms, have a basic understanding of what they are, and then in the next videos everything will make more sense.